right, welcome back. You're with us right here on Indian Open. Let's focus on specific stocks. HEG has just announced a 750 crore share buyback and a 1200 crore expansion plan. The company says the buyback is in keeping with the strategy of rewarding shareholders via a mix of dividend and buybacks. Yathan Mota spoke to the company's chairman and managing director, Ravi Jhunjhunwala, and started off by asking him on how the board came upon the decision to buy back a little less than 5% of the company's equity capital.
The amount of the buyback is 750 crores, and we are going to buy back about 3.4% of the existing equity, which is about 13.5 lakh shares at 5,500 rupees per share. And it is in lieu of dividend to the extent that at the end of last quarter's results, we had announced a 300% interim dividend, and while announcing, we had said that the company would like to maintain its previous payout ratio record of about 35–36%. And considering the first half results and considering the next 6 months projected profitability, we had taken a view that we should announce a 300% dividend at that time, then come back a little later, which is today, with a large buyback, and then leave something again to be given back at the end of the year in April, May, in the form of dividend, in order to maintain that particular ratio of 34–35% payout that we spoke about. So it is basically in line with that.
Okay. And sir, would the promoter group be participating in this buyback?
Yeah, they would be, and okay. This is part of our announcement which we have done.
Okay, okay. And sir, if you could tell us that you also have announced, capacity expansion. If you could tell us, in terms of the capacity addition, the announcement that you have made to stock exchange, that will be close to 12,000 tons or so. How do you, look at it from the perspective of the future outlook? Because your 20,000 ton per annum project, would be completed in phases.
No, it won't be completed in phases. It will all be done in about 3 years' time. It will all come together. It's not. Okay. There's no phasing into this.
Okay.
And this will take our capacity from about 80,000 tons to 100,000 tons. In terms of, to put it into perspective, this 20,000 ton increase is less than 3% of the total world market currently. The total world market currently is in the region of about 700,000 tons.
Okay.
So this 3% is also going to come in 3 years' time.
Okay.
And given the structural change that this industry has seen because of what China did about 12 months ago, we don't see this changing anytime soon. So we do believe that it's a very small tonnage which is coming out in the market in about 3 years' time. Okay. And the market continues to be robust, and we don't see any problem in being able to place these additional electrodes 3 years down the road.
Okay. And sir, what would be the cost of this total 20,000 tons capacity, and how would you be funding the capital expenditure program?
The cost is about 1,200 crores as of now, and it will take 3 years, as I said.
Yeah.
Currently, we have about 1,400 crores on the books as a treasury.
Okay.
So we should be able to meet the entire capex out of internal fundings.
Okay. And sir, as you were mentioning earlier in the conversation, that there were certain structural changes in the Chinese market because of which the graphite market is what it is today. In terms of pricing outlook, since the prices have been firm to stable in the last few quarters or so, does the outlook remain that promising? Do you expect the prices to remain stable at the current levels, or do you think the overall market is slightly soft, given the fact that there has been steep correction in steel prices as well?
No, the steel production has not come down, and the market continues to be pretty strong. And we believe that the current pricing should continue for some more time.
Okay. So, the broader question really is that from this 20,000 tons that capacity that you are putting up, will this entirely be dedicated to the export markets?
Not necessarily. Our previous track record is that about 1/3 of our sales has been going to the domestic market, and about 2/3 has been export. So there will be some small changes here and there, but given certain things which have happened in this country, where a lot of these steel plants have changed hands recently, some are likely to change hand in the near future. So this is likely to increase the demand for electrodes pretty steeply in our country also, because obviously these companies who are changing hands or who have changed hands have now gone to much stronger hands. So capacity utilization or further expansions in those capacities will happen pretty soon. So that will lead to additional demand of electrodes within the country as well.
And sir, one final question on the input prices. On the input front, how have you seen the marketplace doing? Because there was recent volatility in the currency, there was recent volatility in crude prices, and how do you see needle coke prices moving up? So on the input prices, if you could give us a flavor as to how are the things shaping up in the marketplace?
So the input price, basically our major raw material is needle coke, which is imported. And we have a 6-month contract. The period of contracting has been about 6 months.
Okay.
So as we speak, we are right now in discussions for the prices for the first half of 2019. So we will see what happens. I mean, we still don't know how much increase there is, but there is definitely going to be an increase.
All right, that's the management at HEG talking about their buyback.